Ladies and gentlemen, gather around and prepare to embark on an unforgettable journey into the exhilarating world of stocks and financial wizardry. Welcome to Stock Marketpedia, where the stock market meets showtime. Let's kickstart this electrifying adventure together and redefine what it means to be the stock market superstar. So without further ado, hit that play button, fasten your seatbelts, and let the financial extravaganza begin. Get ready for a wild ride because Stock Marketpedia is here to rock your world. Understanding and analyzing a company's income statement is crucial for successful investing. In this video, we'll guide you through the process of reading and analyzing an income statement using Apple as an example. Whether you're a beginner or an experienced investor, this information will be valuable for your investing journey. Before we begin the explanation and analysis, let's first understand what an income statement is and why companies use it. An income statement is one of the three essential financial statements used to report a company's financial performance over a specific period. The other two key statements are the balance sheet and the statement of cash flows. The income statement breaks down a company's revenue, which is income from selling products and services, and its expenses, which are costs of production, employee wages, rent, etc. Ultimately, it shows the company's profit, which is the difference between sales and all associated expenses. Now let's make this concept more practical by using Apple and its income statement as an example. Publicly traded companies are required to make their financial information available to the public. You can easily access a company's financial statements by searching for their annual report on Google. In this case, we'll search for Annual Report Apple, which will lead us to Apple's Investor Relations website. There, we can find a link to their most recent annual report, also known as their 10K filing. With the annual report, we can find the income statement and analyze it further. Apple's income statement. Now let's begin breaking down and analyzing the income statement. Here are a couple of important points to note while examining a company's income statement. Firstly, in the case of Apple, the numbers are presented in millions of dollars. This format is used to condense the income statement and make it easier to read. So when you see a figure like 365 billion, it actually represents $365,000 million. Secondly, it's essential to be aware that the fiscal year of some companies may not align with the calendar year. For instance, Apple's fiscal year 2021 ended in September 2021, not December 2021. This discrepancy can be confusing even for individuals with experience in analyzing companies or an accounting degree. While it's not of utmost importance, it's something to keep in mind when examining financial statements. Now let's proceed with the analysis. Details of the income statement. At the beginning of an income statement, the crucial line item is the company's sales or revenue. Companies often break down their sales into different segments or geographies to provide more detailed information about their revenue sources. For example, Tesla categorizes its revenue into automotive sales, from selling vehicles, automotive leasing, renting vehicles to customers over a longer period, energy generation and storage, which is solar panel business, financial services, and others. On the other hand, Apple breaks down its revenue into two main categories: products, which are sales of physical products like iPhones, iPads, etc., and services, which is revenue from software and subscription services such as the App Store, Apple Music, etc. Understanding why companies segment their revenue in this manner is essential. It provides investors with a more comprehensive understanding of how the company is performing and allows for easy tracking of specific business goals. For instance, Apple's management has focused on growing the services side of the business, and by separating services revenue from product revenue, investors can assess the progress by comparing the year-over-year growth rates of these two categories. Moving further down the income statement, a combined revenue figure is significant for investors, as it indicates overall revenue growth. Comparing the company's revenue growth rate to competitors in the same industry helps assess its performance. In the case of Apple, their revenue grew by 5.5% in 2020 and 3.33% in 2021. Continuing down the income statement, the next line of items will be discussed next. Cost of sales. Moving forward on the income statement, we come to the costs associated with building the products or services being sold. To illustrate, let's consider General Motors, which sells cars. Their cost of sales would include expenses for tires, engines, vehicle frames, interiors, and all other components involved in car manufacturing. Similarly for Apple, it would encompass the costs incurred in manufacturing iPhones, iPads, Macs, and other products and services they offer. When analyzing this section of the income statement, it's crucial to calculate and consider the gross margin. This can be computed by subtracting the cost of goods sold from the sales figure, resulting in gross profit. Then dividing this gross profit by sales provides a gross margin percentage. In general, a higher gross margin is favorable as it indicates strong pricing power. To elaborate, let's take the example of Apple manufacturing an iPhone. If the cost to produce the iPhone is $500 and they are able to sell it for $750, the gross profit would be $250, which is $750 minus $500. This translates to a gross margin of 33%, which is $250 divided by 750. However, if Apple manages to sell the same iPhone for $1,000, the gross profit increases to $500, which is $1,000 minus $500, resulting in a 50% gross margin. Understanding this concept, it becomes important to know the difference in gross margin between the product and service segments of Apple's business. The gross margin in the services business is almost double that of the products business. This highlights why Apple's management focused on growing the services side and why it's significant for them to separate services revenue from product revenue. As an investor, it's generally favorable to observe increasing gross margins over time. In Apple's case, their gross margins were 37.8% in 2019 and 41.8% in 2021, indicating an upward trend. Continuing down the income statement, we'll discuss the next line items. Operation expense. The next section of the income statement comprises the expenses associated with running the business. Unlike the cost of goods sold, which directly relates to manufacturing products or creating services, these expenses cover broader operational aspects. For Apple, the two main operating expense categories are research and development, or R&D, and selling, general, and administrative expenses, or SG&A. R&D expenses encompass the costs incurred in researching and developing new products. An example for Apple would be the development of the rumored Apple Car, where all associated expenses would be classified as R&D. SG&A expenses, on the other hand, include costs such as office rent, employee wages, marketing, and other expenses associated with the business but not directly linked to manufacturing or R&D. Analyzing these costs can involve comparing them to total revenue. As a company grows its sales, it's desirable to observe if expenses remain the same or grow at a slower pace than sales. For example, SG&A as a percentage of sales was 7% in 2019 and decreased to 6% in 2021. Generally, a downward trend in these expenses over time is favorable. Moving on, we come to operating profit, which represents the company's profit before subtracting taxes and interest paid on debt. It's calculated by subtracting the total cost of sales and operating expenses from revenue. A useful tool for analysis is the operating margin, which is the operating profit divided by revenue. This percentage indicates how much profit is generated from each dollar of revenue, and an upward trend over time is positive. In Apple's case, the operating margin was 24% in 2019 and nearly 30% in 2021. The subsequent line item on the income statement will be discussed next. Other income and expenses. The income statement is a crucial financial document that provides insights into a company's financial performance. It outlines the revenue, expenses, and overall profitability of a business over a specific period. By understanding the components of an income statement, we can analyze the impact of various factors on a company's future results. Typically, an income statement starts with the revenue generated from a company's core operations. However, there may be additional income and expenses that fall outside the normal scope of business operations. For instance, if a company like Apple invests in a tech startup and earns profits from that investment, it would be included in this section. After accounting for these non-operational items, we arrive at the earnings before taxes figure. This represents the company's profit before tax obligations are deducted. To obtain the final net income, taxes are subtracted from the earnings before taxes. Net income is the figure most commonly referred to when discussing a company's profit. To demonstrate the workings of the financial model, hypothetical numbers are used. For example, let's assume a 10% growth rate for Apple's products business and a 20% growth rate for its services side. Moving on to gross margins, it's assumed that Apple can increase its gross margin by selling products at higher prices, with projected margins of 36% in 2022, 37% in 2023, and 38% in 2024. Similarly, for services, margins of 70%, 71%, and 72% are assumed for the respective years. The model also assumes a constant 6% of sales for research and development expenses and a decreasing selling, general, and administrative expense as a percentage of sales, with rates of 5.75% in 2022, 5.5% in 2023, and 5.25% in 2024. Other income and expenses are left as zero, as predicting this amount accurately is challenging since it's contingent on specific circumstances. Lastly, a 15% tax rate is assumed, and based on these projections, the model calculates the net income. Under the provided assumptions, net income is projected to grow by 14.2% in 2022, 18.3% in 2023, and 18.2% in 2024. It's important to know that these are hypothetical numbers and do not represent the creator's actual predictions for Apple's financial performance. That's a wrap for today's video, but the excitement doesn't stop here. Get ready for more mind-blowing content coming your way. We'll be pumping out videos 3 to 5 times per week, so buckle up for an exhilarating ride. Drop your comments below with your topic requests because we want to hear from you. And don't forget to smash that like button, subscribe, and hit that notification bell to stay in the loop. Stay tuned for the next thrilling episode on Stock Marketpedia, where we make stocks sizzle.